Hello. Hope you can hear me. This recorded discussion will be all about the other aspect of audit of investing cycle. So I believe some of your IRC4 professors have already discussed a few aspects of the audit of investing cycle because if you look at it, um, if you look at its entire picture, we can see uh, property, plant, and equipment, and intangibles as part of the investing cycle. This aspect of investing cycle this time will be focused on the literal investments that we know. So we will be discussing several investments, quote unquote investments. I think this is the last part of the audit of investing cycle. So let's recall what is the main purpose of a business, why a business has investments. So an investment is an asset held by an entity for purposes of accretion of wealth. So the increase of wealth. How? How do we increase our wealth? Through the distributions of dividends, interests, and rentals, or for capital appreciation or other benefits to be obtained. So the balance sheet classification of investments could be current or non-current, or we can refer to non-current investments also as long-term investments. So very briefly, we could say that an investment is a current investment if by its nature it is readily realizable and is intended to be held for not more than 1 year, not more than 1 year from the date on which such investment is made. Now, if our intention is to hold it for more than 1 year, then by residual definition, that investment is not a current investment, but rather a non-current investment, or AKA long-term investment. So let's have a quick glance of what is the specific purpose of a certain investment. So in this column, we can see several investment types and its particular purpose on the second column. So first, we have investment in equity instruments, particularly financial assets at fair value. So if we have this type of investment, the main purpose is to earn from changes in fair value as well as from the dividends that we receive from these equity instruments. Because when we say equity instruments, this actually pertains to stocks or shares. So that means that if we have an investment in equity instruments, that means that we are a shareholder or a stockholder of another corporation. So we earn from this investment through the changes in fair value, which we record every end of the period, as well as the dividends that we receive as a stockholder, since we are stockholders, man. So we receive dividends from the issuing corporation, the corporation that issues these shares or stocks. We collectively refer to as equity instruments. And that is for financial assets at fair value. We can also have investment in equity instruments, but from an associate. So if these equity instruments, or if we hold stocks or shares from an associate, the purpose is to benefit from exercising significant influence over another entity. So the magic words here for associate is we exercise significant influence. We can also hold shares or equity instruments from a subsidiary. So, what is the difference between an associate and subsidiary? We will discuss briefly later. But the difference with regard to the purpose of having these equity instruments is to benefit from exercising control over another entity. So, for associate, we just exercise significant influence. But if we hold stocks from a subsidiary corporation, we can actually exercise control over the subsidiary corporation. And then we can also have investment in equity instruments, but this time for a joint venture. So the purpose of having this investment is to benefit from exercising, keywords here is joint control over another entity. So usually we do joint venture if we have a specific project, like for example, two or more corporations create a joint venture in order to build a, let's say, a bridge or a road. Okay, so the joint venture is only for a specific project. So we could say that the joint venture actually is a temporary entity that will cease its existence will cease at the end or at the completion of that particular project that the joint venture was created for. So far we have here 1 to 4 investments. Those revolve around equity instruments, but this time we can also have investment in debt instruments. Debt meaning liabilities of another corporation. So, for example, another corporation is in need of additional funds, so it decides to issue a bond or bonds. So if you buy a bond from another corporation, you become a bondholder, and you will become a sort of like a creditor of the issuing corporation, and you will be entitled to receive interests because a bond or a debt instrument is a liability of another corporation. So aside from paying off the principal, that issuing corporation is also liable to pay you as a bondholder interest. So the purpose of holding this type of investment is to earn from changes in fair value and interest. We can also have an investment in special purpose funds. The purpose is to accumulate funds for basically any purpose, such as plant expansion and long term debt retirement. So we can have a bond sinking fund. I'm sure you're familiar with it. So, a sinking fund is a fund um, that is put there to to pay off a specific purpose. Like for example, if you have issued bonds and you intend to pay off the bonds in the future, and then um to help you pay for it, you establish a bond sinking fund. You can also set aside a specific fund for plant expansion. So if you are planning to buy new equipments or new machineries for your plantani mo, you can have an investment in special purpose funds. You can also have debt retirement, as what I've mentioned. An example is your bond sinking fund. You can also have an investment in special purpose funds, for example, in um, what you call this? If you want to branch out, so if you want to establish another branch in another geographical location, so you can also have this investment in special purpose funds. Okay, and you can also have investment in derivatives. So the purpose is to earn from changes in fair value, because as we have learned in our finance subjects, the value of derivatives are constantly changing. So if you are good at speculations, you can really earn from changes in fair value of derivatives. And then we can also have investment in life insurance policies, particularly with respect to its cash surrender value. So I believe you were also able to compute for cash surrender value in your financial accounting subjects. So since this is an audit subject, we will not focus on the actual computations of these items, but rather we look at it on an auditor's perspective. So, for life insurance policies, of course, our purpose is to compensate us, the entity, from the untimely death of key officers. So, usually, for example, if a specific person is a key officer, when we say key officer, that person is very, very important to the company, such that if that person will die, the company will suffer a loss because it is hard to replace such officer. Then most of the time, the company will obtain a life insurance policy covering the life of that specific key officer, so that when that key officer dies, we will be able to receive the proceeds of life insurance to compensate the losses that we will be suffering from the death of such key officer. Okay, so having known this, these are the most common types of investment. We will now proceed to our audit of these investments. So, the first thing that we need to do is to understand the client's investing activities. So, at this point, um, we will be approaching the investing cycle in the eyes of an auditor. So, of course, first, if you have an audit client and you are to audit that specific client's investing cycle, we have to understand first, that before we can proceed to the actual audit procedures, we need to understand the client's investing activities. So the complexity of the auditing entity's investments is always going to be different, because for entities with simple investment instruments, auditing does not require much tedious work. So if a specific audit client only holds a simple investment, our audit procedure will also be very, very simple, very much straightforward. So dili kayo siya kapoy. One of the primary audit procedures might be to confirm its existence. As you all know at this point, we have several management assertions, and one of which is the existence or occurrence. So for existence, we need to confirm that this particular investment that we can see in the audit client's trial balance and balance sheet, we have to confirm that this investment really exists. So we need to send out a confirmation letter. Under other conditions, complex investments or entities with large investment portfolio, however, require additional work such as auditing the values. As investment complexity increases, so will the need for more highly competent audit team members, those that can thoroughly understand unusual investments. So this also affects the staffing now of our audit team. So at the start of our audit, diba, we need to decide um, which members of the audit firm will belong to the audit team that will audit this particular client. So, if that particular audit client holds several investments, and some of which are very much complicated, for example, naa siya mga derivatives. No? So, medyo lisod man na siya ang derivatives. So, you also have to appoint members or assign members um, that are expert in finance para mo-audit ana nga type of investment. Okay, so the inherent risk for an assertion about an investment is its susceptibility to a material misstatement, assuming there are no related controls. Factors that might affect the auditor's assessment of inherent risk for assertions about an investment include the following. So, the complexity of the features of the investment and whether external factors affect the assertion. So basically, when we speak of inherent risk, um, it is actually risky by its nature. So we cannot do anything about it. Inherent risk as part of the overall audit risk that is beyond the control of the auditor. So we cannot do anything about the inherent risk. And the inherent risk is actually dependent upon the nature of the audit subject. So, for example, if the audit subject or the thing that you are auditing is very, very complicated, it involves several applications of assumptions and business judgments, then we can say that inherently that audit subject is risky. But if the audit subject is very much straightforward, there are no mga assumptions involved because again straightforward naman siya, makomputer siya using basic formula sa ato ang financial accounting, then we can say that that audit subject is inherently not so risky. So therefore, the inherent risk for that subject is lower as compared to the audit subject that is very much complicated. So if we are to apply that concept in the audit of investments, so if a particular investment is simple, so we can say that the inherent risk is low. If the investment is complicated, such as derivatives, we can say that the inherent risk is high. Okay, and then we proceed to the internal control evaluation. The auditor should carefully evaluate and study the system of internal control for audit clients that have large investment portfolio to determine the nature, timing, and extent of audit procedures. Since it has several investment related transactions, the auditor should decide whether it would be more efficient to conduct a test of control before substantive test. Before he opts to decide to rely on test of control, the auditor should ascertain the following internal control regarding investments. First, is there control over acquisition of investments or accretion of investments or disposal of investments? And then um, what what does the audit client do in safeguarding its investments? Are there controls relating to the title to investments and other information controls? So, after which, if you decide to conduct a test of control, you can now have a control risk assessment. So, 'di ba, if you are to recall the audit risk formula, so the total audit risk is comprised of the inherent risk, then control risk, and then detection risk. During our first phase, where we understood the client's investing activities, we were able to do inherent risk assessment. So that's first aspect of the audit risk, no inherent risk, and then comes the control risk. The control risk will be assessed through our conduct of test of controls. So after obtaining the understanding of the internal control over the investment transactions, the auditor should assess control risk for the related assertions. If the auditor plans to assess control risk at less than maximum for one or more assertions regarding investments, the auditor should specify specific controls relevant to the assertions that are likely to prevent or detect material misstatements and gather audit evidence about their operating effectiveness. So after we assess the control risk, so check na ta ni inherent risk, check na pud ta ni control risk, we now proceed to detection risk. So the detection risk is the risk that is that is within the control of the auditor. So if we want detection risk to be low, the scope of our substantive test should be extensive. So, dapat daghan kag buhaton nga substantive test in order for your detection risk to be low. If we can accept a higher detection risk, that means mas gamay na lang na substantive tests ato ang buhaton. So, the detection risk actually pertains to the extent of our substantive test. So therefore, we now proceed to the substantive testing. So let's look at the primary substantive tests first, and then we proceed to the other substantive tests. The auditor should use the assessed levels of inherent risk and control risk for assertions about investments to determine the nature, timing, and extent of the substantive procedures to be performed to detect material misstatements of the financial statement assertions. So again, as what uh I have been telling you, um, the detection risk is the risk that is within the control of the auditor. So, if you have a high inherent risk, if based on your assessment, the audit client has a high inherent risk and a high control risk, to compensate these very high risks, you need to minimize the detection risk. So, in order for you to minimize detection risk, you need to conduct extensive substantive tests. So, your nature, timing, and extent of your substantive procedures will actually depend on your inherent risk assessment and control risk assessment. Some substantive procedures address more than one assertion about various investment transactions. So, like this one, I have merged two assertions, existence and rights, diba? Usually, we can see existence paired with occurrence, no, existence or occurrence, and then sa rights, kay rights and obligations. So, since um these particular audit procedures address already two management assertions. So ako are siya combine. So this is for existence and rights. So our audit objective for this particular assertions are the following. So we need to check whether all recorded investments in the statement of financial position actually exist. Dili lang siya imaginary or dili lang siya gibutang dito to bloat the assets of the audit client to make it look good. So we need to check whether these investments actually exist, and then whether the entity owns or has legal right to the investments included on the statement of financial position. Because we do not stop on the discovery that, oh yes, this actually exists, but you also have to check nga, since exist man siya, ang question is, do we really own it? So you need to look at the name nga, for example, if this is an equity instrument, 'di ba, this is backed by stock certificates. So you can look at the name included in the stock certificate whether ang pangan dito is si audit client yun. If not, that means that the stocks do not actually belong to the audit client. So the audit procedures in order for us to obtain these objectives are the following. Okay. If the securities or evidence of ownership is held by the client, the auditor counts the securities or instruments on hand with simultaneous count of cash and other negotiable instrument to prevent substitution. If held by third party, the auditor will confirm to the custodian or arrange for a visit to the custodian and conduct a count. For investment properties, arrange for an ocular inspection of investment properties and trace back acquisition of investment properties to acquisition documents. So if you recall in your financial accounting subject, investment properties are those properties that are held by this is either a building or a land held by a company for purposes of appreciation. So, wala niya gipalit para gamiton para sa iyang business, but rather i-hold lang niya for capital appreciation. So, for investment properties, you can look at the acquisition documents such as the deed of sale, um deed of sale, 'di ba? If pagpalit niya sa building or pagpalit niya sa land that is being held for capital appreciation, na na siya supporting deed of sale. So you can look at the acquisition documents related to those properties. So here are the documents that we can use for our audit. We can look at the stock certificates for equity investments. Again, I've mentioned a while ago that when we speak of equity investments, this actually pertains to us holding shares or stocks of another corporation. So we can expect that there are stock certificates for those equity instruments. And then confirmation letter, this is for to confirm the existence. So for example, we can see nga, na ay stock certificates dairy, let's say holding 100 shares of ABC Corporation. So naa siya, nakita na to. So we can send a confirmation letter to ABC Corporation asking them to confirm whether this particular audit client really owns 100 shares of ABC Corporation. So mag-send ta og letter. Then we can also look at deed of sale and other title transfer papers. You can look at the transfer certificate of title issued by the Register of Deeds. Dapat ang nakapangan dito nga owner sa titled property is the audit client. So this is a sample of a confirmation letter. So for audit purpose, kindly send directly to our auditors a certificate regarding all shares, blah, blah, blah. So this is a letter that we send to persons that um issue that issued the investments held by our audit client. Another management assertion is completeness. So our audit objective is to determine that investments to which the company has title to are all included in the in the statement of financial position. So dapat tanan nga investments na appeal, walay nakalimtan. So that is for completeness. Our audit procedure for that is to trace selected purchases and sales of securities and other investments during the year. So if there are several transactions related to investments na ay natigibaligya, na naputegipalit, nagibaligya, ipalit. So that that actually raises a possibility nga base na ay uban nga nakalimtan og include sa ato ang statement of financial position. So we can also inspect securities on hand and obtain confirmation of securities held by others. So the documents that we need here are actually this more or less the same. We can look at stock certificates. So for example, nadtoy daghan nga stock certificates. Every time magtan-aw ka og stock certificate, i-trace nimo siya dito sa balance sheet or sa ledger baron sa kanang investment. If naa, then check na siya. If a particular stock certificate is there, nakakita nimo, pero wala nimo siya na trace sa ledger, that means that that certain number of shares or stocks covered by that particular stock certificate was not included in the ledger. So that means that dili kompleto ang na-record. So what we do as auditors, we need to make a proposed adjusting journal entry to correct the balance of the investment in equity instruments. We can also look at deed of sale and other transfer papers, and we can also refer to the board of directors minutes of meeting. We can actually um, discover new things nga dili na to makitaan sa uban nga documents during the meeting nga nahisgutan lagi nila inani pero nga nang wala siya sa records. So you can look at the minutes of meeting. And then another assertion is occurrence. So kabantay mo di ba gi-split na ko si existence with occurrence. So occurrence and valuation and allocation is merged. So because these two assertions, kaning occurrence and valuation and allocation, we will perform the same audit procedures for these two assertions. So our audit objective is to make sure that all recorded income from investments has accrued to the entity at the reporting date. So for example, if you hold a bond, investment in bonds, and then makit-an didto, di ba kay ang bonds kay debt instrument man siya. So what we receive here is interest and not dividend. So let's say in the income statement, you can see there interest revenue, mo na compute, let's say 100,000. So kita as auditors, we need to recompute whether kaning 100,000 is really earned, accrued and earned. If not, we will have to make a proposed adjusting journal entry to reduce the balance of the interest revenue. Another objective is to determine that investments are valued properly in accordance with applicable PFRS. So, what shall we do in order to um, attain these audit objectives? So, the accounting method and impairment test on investments of the client depends on the applicable PFRS. Therefore, the procedure applied by the auditor depends on the type of investment. So, again, we have to use the particular PFRS kay dili man usara ka PFRS ang applicable. I mean, dili siya universal nga. Basta investment gani kay PFRS number ana-ana. Depende ra gihapon unsa na siya nga type of investment. So our audit procedure will change depending on the classification or the type of investment that we are auditing. Okay. So here, if we own less than 20% of shares of a particular corporation, that means our level of influence is just little or none. So, the accounting method that we use most of the time here is fair value for a while. Okay, so accounting method is fair value, and the classification is financial asset at fair value. So the applicable PFRSs for these type of investments are PFRS 9, PFRS 7, and pass number 32. So later we will discuss the audit procedures that are applicable to these type of investments. So if our ownership over a particular entity is 20 to 50%, so for example, we own 30% of the shares, outstanding shares of ABC Corporation, that means our level of influence is significant. So the accounting method that we have to employ is equity method and not fair value method. And the classification of this type of investment will be investment in associate. Diba? Significant control man if we have an investment in associate. So the applicable PFRS or applicable standards for this is pass number 28. If we own more than 50% of a particular corporation, for example, we hold, let's say, 80% of the outstanding shares of ABC Corporation, that means we have control over it. So the accounting method will be consolidation, and we have to refer to it as investment in subsidiary. So since we already own 80%, let's say, of ABC Corporation could now be treated as our subsidiary and we are the parent corporation. So the applicable PFRS for this is PFRS 10. For joint venture, we exercise joint control. There is actually no quantitative presumption of this. So even though you own, let's say, less than 20% of the joint venture, you still have joint control over it. The accounting method is equity method, and we will refer to this investment as investment in joint venture. And the applicable applicable standards for this is pass number 28. Okay, so for investment under the fair value method, the auditor should examine whether at initial measurement, in computing the cost directly attributable to investments, has been expensed outright, so kaning fair value through profit or loss, or was capitalized in the cost of investments in case of fair value through OCI. This is in accordance with application guidance of PFRS 9. So again, we have to look at whether the financial asset at fair value is recorded through profit or loss or through OCI, because the treatment of cost directly attributable to investments is different. Diba? For fair financial asset at fair value through profit or loss, the cost directly attributable to investments should be expensed outright, while for fair value through OCI, it becomes part of the cost of the investment. So it is capitalized as cost of the asset, dili siya i-expense outright. Okay. The auditor should ascertain the fair value of the quoted securities from official quotations of the Philippine Stock Exchange. And in case of unquoted securities, the auditor should ascertain if it was measured in accordance with the application guide of BFRS 9, particularly for financial assets at fair value, in which case equity instruments must be measured at fair value and at cost in case fair value cannot be reliably measured. So, ka-remember mo atong hierarchy. So, ang first priority is the market value. Ang market value is actually based on the quoted prices sa Philippine Stock Exchange. If it is not listed in the Philippine Stock Exchange, um, we can use the methods of computing for fair value as mentioned in our application guidance. And if wala jud siya fair value, wala tayo ma-determine na fair value, then we can use the cost, the actual cost of the investment. For investment under equity method, the auditor, so like for example, equity method for investment in associate and investment in joint venture. The auditor should verify the share in net income or loss by examining the audited financial statement of the investee and making an independent calculation. For dividends received, the auditor can examine published dividend record of the investee. So, for example, if we hold, let's say, 30% of ABC Corporation, we need to be able to acquire a copy of the audited financial statements of ABC Corporation. Then for investment under consolidation, this is for investment in subsidiary. The auditor should verify the beginning balance of the investment for the current year. The auditor will normally refer to its prior working paper. And the auditor will also examine any addition or disposal by examining supporting documentation. We can also test the impairment of those investments. The test of impairment will depend on the applicable PFRS, as I have discussed a while ago, which is to be considered by the auditor in evaluating the impairment made by the management. The auditor should also inquire with the management and their methods in identifying impairment. So basically, for impairments, we need to do a recalculation. So, for example, we can see that the impairment loss reported in the income statement is this much. We need to check whether the computation of the impairment loss is correct, and we have to use the applicable PFRS in our recomputation of the impairment losses. So, the documents or files that we need for this for these audit procedures are the following: the audited financial statement of the investee corporation, and we can look at the PSE Philippine Stock Exchange quotations. So those are our primary substantive tests, and now we look at other substantive tests. Okay, so for the assertion of accuracy, our audit objective is to determine whether the amounts and other data relating to recorded transactions and events have been recorded appropriately or correctly. So, the audit procedure that we are going to perform are the following: evaluating the accounting methods used and test the valuation, investigating current and potential impairments of investments, inquire with management regarding their approach in identifying indicators of impairment and the actions taken as a result of any potential impairment that was noted by the management. evaluate the appropriateness of the valuation model and the assumptions used, assess the reasonableness of the management's estimates, evaluate the accuracy, completeness, and relevance of the important data on which the estimates or measurements are based. So, the major document that we need for this type of assertion is still the audited financial statement of the investee. Now, for another management assertion, classification of the investment. Audit objective is to determine whether the income statement related items are appropriately recorded in the proper accounts in the statement of comprehensive income. Um, for the audit procedure, we can review the appropriateness of presentation and adequacy of disclosure of investments, including related accounts. So for the disclosures, you can look at the particular applicable PFRS, and katong mga PFRS nga applicable for that type of investment, naglista naman sila dito kung unsay kailangan nga mga disclosures sa nga dapat i-include sa notes to financial statements. Discuss with the entity the process used by management in classifying its investments. So you can actually use the table I've presented a while ago in order to determine the proper classification of the investment. Diba? So, for example, if you have, I mean, the audit client is holding 20 to 50% of the investee corporation's outstanding shares, that should be classified as investment in associate. If it was classified as investment in subsidiary, then we have to make a proposed adjusting journal entry to correct the classification. The document that we need is still the audited financial statement of the investee. Next, we have presentation and disclosure. Audit objectives, particular to this type of assertion, are the following. Okay, whether investments and related investment income accounts are properly classified, described, and disclosed in the financial statements, including notes. Notes to financial statements in accordance with the applicable PFRS. All investment pledged or other security interest are adequately and properly disclosed. So for example, si audit client na siya utang sa bangko, and as collateral, iyang gi-collateral ang isa ka investment niya. So gi-pledge or gi-assign niya dito sa lender. So that fact should also be disclosed in the notes nga. This investment has been used as collateral for this loan from the bank. Okay, so let's look at the classifications and measurement models under PFRS 9. We have amortized cost, fair value through OCI, and fair value through profit or loss. Before the PFRS 9 was amended, kaning si fair value through profit or loss is termed as trading securities. Fair value through OCI, it was referred to as available for sale, and amortized cost held to maturity. So if you encounter these terms, at least kay na mo. If makita mo held to maturity, that means amortized cost di ay. If makita mo available for sale securities, then that should be fair value through OCI. And if makita mo trading securities, that means fair value through profit or loss. So for amortized cost, the asset is measured at the amount recognized at initial recognition minus principal repayments plus or minus the cumulative amortization of any difference between the initial amount and the maturity amount and any loss allowance. The interest income for investments at amortized cost is calculated using the effective interest method and is recognized in profit and loss. Changes in fair value are recognized in profit and loss when the asset is de-recognized or reclassified. So you have actually learned this in your financial accounting subject. So this is just a review. For fair value through OCI, the asset is measured at fair value. Here, the asset is measured at amortized cost ni siya. Here, fair value. For loans and receivables, interest revenue, impairment gains and losses, in a portion of foreign exchange gains and losses are recognized in where profit and loss. On the same basis as for amortized cost assets. So like this one daw, that is babaw. Changes in fair value are recognized initially in OCI. Okay, so again, interest revenues, kani siyang akong ipang mention, profit and loss na siya. However, changes in fair value, dili siya dito sa P&L, but rather they are recognized initially in OCI or other comprehensive income. When the asset is derecognized or reclassified, changes in fair value previously recognized in OCI and accumulated in equity are reclassified to profit and loss on a basis that always results in an asset measured at FV, COI having the same effect on profit and loss as if it were measured at amortized cost. So meaning daw, I know na discuss na ni sa inyong financial accounting subject, but let's just recall changes in fair value for financial assets at fair value through OCI will be initially reported in the OCI and not profit and loss. Unya, mo-accumulate na siya. So let's say every year, nag-recognize mo changes in fair value sa OCI, OCI, OCI. But ang accumulated ana niya nga amount, dito na siya isud sa equity portion. Accumulated in equity. If that particular investment, for a while So if that particular investment is derecognized, so when we say derecognized, pagtango na siya sa financial statement. For example, if imo siyang gibaligya to someone else, so you will have to derecognize the investment. So if it will be derecognized, so katong mga changes in fair value, unrealized gains and losses, no, nga na-report sa OCI will then be transferred to profit and loss. Okay, so if same thing actually with investments in equity instruments. So the dividends that we receive are immediately reported in the profit and loss. So dividends are recognized in profit and loss. Unless they clearly represent recovery or a part of the cost of investment. So when we say recovery of a part of the cost of investment, that actually is a liquidating dividend. So if liquidating dividend daw, then they should be included in OCI. But if it is not a liquidating dividend, that dividend should be reported in the profit and loss. However, changes in fair value are recognized in OCI. Okay. FVPL, so financial assets at fair value through profit and loss. The asset is measured at fair value and the changes in fair value are recognized in profit and loss as they arise, as compared to here OCI, where the changes in fair value are recognized in OCI and not P&L. Okay, so this actually gives us an idea whether a particular investment should be treated as a financial asset at fair value through profit or and loss, or fair value through OCI, or through or to be recognized as an investment that should be recorded through amortized cost. So, guide na siya. Okay, audit procedures in relation to this particular assertion, presentation, and disclosure. Okay, review board of directors meet minutes of meeting, shareholders meeting, committee meetings, and agreements and confirmation replies. Supposedly there na siya, sunod na siya. Gather evidence regarding authorization liens and pledges. Disclose unrecorded purchases and sales of securities or other financial instruments. Review appropriateness of presentation and adequacy of disclosure of investments, including related accounts. Determine the applicable PFRS in the proper classification and presentation of investments in the statement of financial position and necessary disclosures. Determine that the related income statement accounts are correctly recorded in profit or loss or as a component of OCI or other comprehensive income. The documents that we need for this particular assertion are the following. So the minutes of meeting of the BODs, audited financial statement of investees, and other evidence to determine current values of investments. So the auditor should obtain from the management of the entity a written statement regarding classification and valuation of investments for balance sheet purposes. While such a representation letter serves as a formal acknowledgement of the management's responsibilities with regard to investments, it does not relieve us, the auditor, of our responsibility for performing audit procedures to obtain sufficient appropriate audit evidence to form the basis for the expression of our opinion on the financial information. It may be mentioned that the representations made in the letter can alternatively be included in the composite representation letter, usually issued by the management to the auditor. So, apil na siya sa ato ang audit report, no? Part siya sa ato ang i i-attach ang katong statement of management responsibility signed by the management. Management sa audit client. So for documentation, the auditor should maintain adequate working papers regarding audit of investments. Among others, the auditor, should maintain on his audit file the management representation letter concerning the investments. Right. So that basically covers the audit of investments. Um, what comes after is a set of situational problems and practical problems. So I believe um, you can look at this on your own. You can read this on your own. Anyway, for situational problems, I already included the discussions of the cases. And then for the practical problems where you need to compute, I also included the suggested solutions together with, yeah, the suggested answers together with the supporting computations and how to arrive at these answers. So please, if you try to compute for these problems, ka-vary lang sa ninyo ang answers there is ubos. And then after computing what is required, compare your answers to the suggested answers and solutions, and then point out kung asa mo na sayo. Okay? So that's actually active learning. Mas maka-remember magud ta if asa ta na sayo kaysa kung tagaan ka diretso sa answer, no? So at least if masayop ka, makagets ka diri pagtan-aw nimo sa solutions kung asa ka nasayop, and then later on makahinumdum na ka, ginani din ni siya. Okay? So for purposes of your pre-finals, kay nagsabit naman ko ni Richie og questions for investments. Focus lang on the kaning practical problems because ang akong gihatag niya nga mga questions kay purely computations lang yun. Wala ko naghatag og theory nga question. Purely computations lang. So practice lang, and then you might also want to revisit your notes sa inyong financial accounting nga subject, particularly sa kaning mga investments. Okay? Sige, thank you.